Good evening, traders. This is Barry from London. Just want the currency pair I'm looking at today is the Australian Kiwi on the hourly chart. But before I do that, I just want to quickly do a follow up on the video I posted on Sunday, 3rd of July, which is to trade dollar Swiss on the hourly chart to go short, to trade a correction to a 5-year rally. Now, in that video, I mentioned that I will be targeting the 6-1 retracement of the 5-year rally at 870, which is where my target was. But based on the price structure of the correction, which has unfolded from this high, I feel like the correction has been complete, even though my target hasn't been hit yet. If you look at the price structure of the decline from this point, you can easily see an A, B, C, which is typical growth structure for a correction. Now, based on my Fibonacci analysis, which I'll show you in a minute, I feel this candle here, which has a low of 8389, ends that correction. Now, just a quick Fibonacci analysis to see how I arrive at this conclusion. If you look at it with a leg, if you do 161.8 extension of with a leg, project that from the B point, and right there. And if you do 261.8 extension of the AB leg, which gives you that level, and 50% retracement of the 5-year rally, which gives that level, that this zone here gives you ideally, according to the Fibonacci analysis, is where wave C should complete. And you can see this level has been reached and price has been rejected from that level. Now, I'm not saying this dollar Swiss will rally or break down or consolidate. I don't know what's gonna happen next, but based on my analysis, the correction has been complete, and now I'll be trailing my stop to probably like 84.60 just to see what happens. Because if price breaks down, then good for me. I'll just stay in the trade. But if there's a rally from here, then I'll close out the trade. So just a quick follow up on my trading video from Sunday. Right, on to the currency pair of today, which is the Australian dollar Swiss Kiwi, New Zealand dollar pair, the Audnzd Swiss. Now again, what I'm looking at here is an harmonic pattern called the Bearish pattern, like all other patterns, like bat, gatling pattern, butterfly pattern. All this pattern tries to do is identify potential resistance or support zone. In this case, because it's bearish, is identify a potential resistance zone where price should fall. Like when price reaches this level, it should actually fall. And what I'm looking to do is to go short once price goes into this resistance zone. Just a quick word on the bearish pattern. It's literally a 5-point structure. You've got X, A, B, C, D. The B leg is roughly 61.8 retracement of the XA leg. The C leg is 88.6 retracement of the AB leg, right there, and the D leg should form in a resistance zone, which consists of price level, Fibonacci projection from price leg within the pattern. So the lower boundary of this level is the 161.8 extension of the XA leg. The upper boundary is 261.8 extension of the BC leg, and ideally the projection from the Fibonacci projection of the AB leg, projection from the C leg, is not that important in this case. The only requirement is the 100% of that, and maybe 127% of that, or 161.8 retracement of the AB leg project from the C point should end within the structure. But the ideal resistance zone should be defined by these two levels here, which I've done. So based on that, I'm clicking on an entry order to go short at 129.80. As you can see, the resistance zone is between 129.76 and 129.85. So I place my order to 129.80, and place my stop loss below. Place my stop loss above this high here. Which is maybe at 129.10. Ideally, once there's a once a 2 or 3 candle closes above this upper boundary of the resistance zone, then this pattern will be invalidated. But obviously, just to give more room for erratic price action, I'm placing my stop loss at 1305 above this high here, 1305. And in terms of profit target, I'll be using Fibonacci price levels. I'll basically just do is, once this D point has been confirmed, although price is going down here, I expect price to come up into this zone before it eventually goes down. But anyway, once this D point has been confirmed and price reversed, then I want to use Fibonacci retracement of the A, from the A to the D point, and use that to manage my trade. And ultimately, if price closes below the 88.6 retracement of the Fibonacci level of price swing from A to D, then I'll be looking for price to go much further downwards. And if you just zoom in, you can see this currency has been in the range, although it's been doing lower highs and lower lows. So if price managed to close below, let me just get a price level out. Assuming price stall in the zone that I'm the potential resistance zone, I just do 88.6 retracement of that. 88.6 retracement of that. Now obviously, if what I'm doing is correct, then price should end somewhere here before reversing. So if I do 88.6 retracement of that right here, then which will be 12887. So if price manages to close below 12887 roughly, then I'll be expecting price to go much further downward. As you can see, below this level, all you have is here. So if price manages to close below that level, then my ultimate target will be this point here, this low at 12800. But anyway, let's not get ahead of ourselves. The idea is price should go into this zone before ultimately reversing. So I expect this bearish price action that is happening right now to retrace and get to this point before the ultimate reversal. And I'll be targeting this is using Fibonacci levels of swing A to D to manage my trade. So that's entry order at 12980, stop loss at between 130,000 and 13010, and is an open objective, but I'll be using Fibonacci retracement of point A to point D to manage my trade. And ultimately, I'm looking for a close below this level, because if that happens, then I can safely say price should continue to move further downwards to this point. So that's what I wanted to show today. Thank you very much for listening and watching the video, and good luck with your trades.